Welcome everyone to the India Market Review for the week ending Sunday, 19th April 2020. We are going to look at major Indian equity index, the Nifty, and then we'll also look at several sectoral indices out of India and look at where the action has been and is likely to be for the coming weeks and months, and if there are any specific opportunities that might be found. Also, just reviewing very quickly the earlier webinar we did just before this, which was the global market review, where we looked at equity indices from across the world and what the global picture and the global setup looks like, which was basically a bullish bias. And we also looked at gold, crude oil, the US dollar index, and the USD INR discussion. So we are going in a global top-down approach, and well, whatever happens in one corner of the world affects everybody else. So with that in mind, we now jump into India and look at where Indian action is. You should be able to see the Nifty chart on your screen, and as expected and as discussed last week, and as the global cues gave, we did break above the resistance levels, and there was this particular level that we were looking at, which was at 9,130. We did have 2-3 days of iffy type of situation, but on Friday we got a very decisive up move, a gap up, as a matter of fact. At open, 3.5% up, went up a little bit more, corrected back to, as you can see, very close to that, or rather exactly to that support zone, went to a low of 9091, met a couple of resistance, or rather support zones with the 9130 plus the moving averages, etc. And then in the last half an hour, 45 minutes of the day, the market really rallied back up. So it's broken out through the resistance and all set up for further up moves by the looks of it. All right, and this should probably continue for the coming week. There is really no significant resistance at this point in the near term. We'll look at it, let's say, weekly chart and see if we can find anything. Right. So we are there right now. So we've had some 2 good weeks of an up move. And if you look at it from really a longer term perspective, there's probably, not any significant, the significant resist rather is closer to 9,900, 9,990, 10,000 almost in terms of tops, bottoms, etc. There is some, minor levels here at 9,670, at 9,500. So that should be minor levels to watch out for. But the big resistance is definitely at 10,000. So 10,000 is the level to watch out for if we happen to make it all the way up there. And that's actually not a small achievement. At 9,266, we are talking almost about a 9-10% up move. Very unlikely that will happen in 1 week, but that's quite possible that it could happen in the coming few weeks, assuming, of course, that there's really nothing else to break the momentum of the market. We also have, as you can see, the 50-day exponential moving average at 9,900. So every 50, 100 points above this, especially every 100 points, 9,400, 9,005, 6, 7, 8, there probably will be some profit taking, ups, downs, and things like that, till we come to a place of any significant resistance, which, like I mentioned, is probably at the 10,000 mark, right? So we'll have to see how it pans out. So the bias is from both from a global perspective and the local chart setup, it seems to be bullish, right? Even on the CNX 500, which is a much bigger basket of 504 securities, 500, yeah, then we are also looking at it probably going up, and at a important resistance level of July 2016, it has to break out of that before certain further up moves are possible, and really no reason to see why that should not happen. So again, in the broader market, we are also looking at likely up moves. Now coming to the specific sector, starting with the heavyweight in the Nifty index, which is the banking sector. Looking at the Bank Nifty, almost has 30 to 40% weightage, and we were discussing this sort of triangular pattern um, in the Bank Nifty, and that clearly broke out on Friday. So after doing 2-3 days of further consolidation within the larger pattern, it has done a decisive breakout, and many banks have actually broken out. Many individual bank stocks have broken out of very clear resistances that have formed over the last 3 to 6 weeks. So Bank Nifty probably looking strong and likely set to go up. However, if you look at the PSU Bank index, the PSU banks are lagging quite badly behind the private sector banks. So massive underperformance, outperformance, however you want to look at it, really, really down and out, all of them without exception. And only now the PSU banks, let me make it daily now, are, so that's the full data we have right now from 2011, so not very long, but still they are now seem to be forming a base on the chart. So the PSU banks, mainly SBI, right, if it is forming a basis. So this index unfortunately is not traded, only the Nifty and the Bank Nifty, all the other indices are not. So this one possibly forming a base, too early to say, but yes, it could be, and there could be some bottoming out at this point, right? So further up moves to the main Nifty itself need to be fed and supported by constituents, and maybe the PSU banks could help the Nifty go up in the coming weeks. So would be worthwhile having a look in that corner. The MACD has turned around, turning up, showing some strength, and that's a good sign, at least on the short to medium term. Right. So Bank Nifty breakout and PSU banks potentially forming a base or have formed a base, both bullish signs. Then coming to the one index that has done tremendously well is the Pharma index. It's been a clear winner. The Pharma index actually topped out in 2015 and has been on a 5-year downtrend, as a matter of fact. Right? And now you can see that clearly it's really zooming back up. So if you look at the multi-year downtrend line right from late 2015 to now, it's come exactly there and just sat shy of that level. It has to, of course, break out, and then if it does, then that's level to watch out for. So the last many days of the various rallies have definitely been driven by pharma stocks. So as a pack, all of them without exception have really done well. So if you look at it right now, the 5-year downtrend line, that's what I'm marking, the most extreme downtrend, or rather the most outermost downtrend line that one could have put. That's what you are seeing on your screen right now. And right now seems to be highly overbought, and a lot of momentum has been built. So you can see that the index has gone from 6,400 levels to 9,400 levels. That's almost 50%. So anybody who was in pharma stock, uh, it would have really been a wonderful return in the just in a matter of a month and a half, right? And right now, unlike the other indices which we saw so far, and even the Nifty, this one is showing a bearish candle, a pretty long red candle. So some cool off perhaps happening in the pharma stocks, and maybe a little too late to enter pharma right now, and maybe wiser to wait for a correction, maybe all the way back to 8,400 or something before pharma does another leg of the rally. So some amount of consolidation, correction is probably likely to happen in pharma, right? Having said that, individual pharma stocks could definitely do well, and some I'm sure will, make another, who knows, 10, 20, 30% gains in the coming weeks, right? So pharma, if you look in it more detailed, look at the constituents, you will definitely find opportunities. But as a group, need to have some caution on that at this point. There's a gap here in the index, which probably will be filled sooner than later, in my opinion. So that's another technical pointer to wait for the gap fill to happen before taking any aggressive long positions. All right, the other index, FMCG, right? So again, like pharma, you saw FMCG hit the downtrend line. This line was already there from last week. And as you can see, it gapped up there on Friday and then really did not recover. I mean, the rest of the market did, but not FMCG stocks. And there was a really interesting, insightful, quite detailed explanation by one of the BIC members about how pharma is doing on the ground, who himself is a FMCG distributor in South India. So it was good to know, and essentially, this rally may be something which is difficult to explain given the breakdown in sales that are happening. So on the ground level, the sales are really not as good as is perhaps being made out in the media and in the business news, etc. Anyhow, a good technical point is the hitting of this downtrend line and cooling off. So pharma needs to be, the FMCG needs to be looked at with a pinch of salt. And again, it's done a massive, uh, rally from 23,000 to 30,000. So just on that count, it probably would be wise to again be a little careful before betting on pharma right now. So some right, okay, that's a lot of lines. Right. All right. So yeah, a little bit of caution recommended on the FMCG space. Then looking at the IT index, let's look at that. So IT has not broken out, okay? Has really not broken out. It's just sitting there right now. So unlike how the Bank Nifty broke out, IT has not broken out. So now if IT breaks out, that would really be a good leg up to the Nifty itself. So watch out for IT in the coming week. That this could be along with the banks, the private sector banks rather, the private banks and IT could be the leaders that make the index go up in the coming week. So IT is still stuck at that 12,850, 12,000, sorry, yeah, 12,860, 12,900 levels. Once it breaks out, then IT easily to about 13,800, which is almost 1,000 points up, which is almost a good 7-8%, right? So that's the place to look at. And then looking at realty, right? Realty and infra. Realty really stuck at this point. Really not much happening. I'm just putting this for observation later. It's not necessarily a really good triangle right now, but or it might become one. Yeah, why not? Right. Now, if this breaks down, then wow, we've got a long way to go, and maybe it reaches its life low, of what is this, 126 from 187, which is another 40% lower. Or if it holds out, technically, if you look at the various indicators and different periodicities on the daily, it seems to be, it's definitely consolidating, but on the weekly, a lot of weakness still left, and that of course will take time to reflect on the chart. But just a word of caution that there could be, it's either ways for reality. There is a case that can be made for a breakout. Again, breakout or breakdown, some bigger moves could be expected on the reality side. Looking at infra on the other hand clearly has made a recovery, quite a impressive one, must say. 2,150 to 2,600. That's almost a 15% recovery on infra, and then stalled at the resistance zone all the way from 2016. So another sector like your realty, like your IT sector, which is at a pause right now, right? If it breaks out again, I don't know if such any substantial moves will happen. I think the bets are better on the private sector banks and the IT side. Right. Last time we were looking at energy, and energy was doing quite well. While it continues to do quite well, this is not volume wise, it doesn't really carry the picture, but this is looking somewhat like a flag with more upside left, nice gap. So never know, 12,600 and even higher possible on the energy side, but energy index is a little skewed, or rather very skewed index. It's I think 30-40% almost weightage is, or at least 20-30% is at least Reliance Industries, just one stock weightage. So in a sense, it's not a proxy, since Reliance is anyhow tradable, but must keep that in mind before reading too much into the energy side. Okay, then looking at auto index. Okay, you can see that's also broken out, done a nice 2-day, 3-day consolidation. Looks like a matte hold pattern from candlesticks, very characteristic of a matte hold pattern. Uh, 3-4 days of small sticks, small candles, and then a gap up like this, and then it continues to rise. Could go back all the way to 14,000. So on the auto side, which has again, topped out in 2018, not in 2020, has the bottom been hit, and will it hold is the big question. Whether it will hold or not, too early to say, but it has come back to the 2010 levels, right? And that's really something to keep in mind, some of these numbers, because you're talking about 2010 to 2020 or 2018, 8 years of gains all given up in about 2 years, and in about 3 months, just about, or 2 months, almost 5 years of gains have just been lost, right? But highly oversold, a bounce, and probably higher till 14,000. Consumer durables really not doing much, right? Bit of a vague pattern, really nothing to write home about, so nothing to really comment. Again, come to yes, 2018 levels or whatever, and just stays there. Okay. Again at a resistance zone. All right. Capital goods, well, that's doing well. It's not rallied up as much as any of the other indices for sure, but showing strength, no doubt about it. There is, however, resistances to be dealt with. So 1 week, very nice 1 week Marubozu candle, quite a strong, tall one, must say. From that perspective, around 13,900 for the coming week. Another from which is like 12,300 to 13,700, let's say, is quite a move. It's almost 7-8%. And I think this is mainly the capital goods index, BSE capital goods, the big brother in that is the big weightage in that is LNT, right? So that, and then looking at metals, it looked like intra-week, last week, metals were beginning to make a big move. They may have started, but really nothing significant, you can say from the overall metal index here. Uh, 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 now that was weekly, now I've moved to daily. Clearly some good support at around, what's that level, 5355, and then has moved up. Could be something to definitely look at. And 7,200, that means another almost 8% up on the metal index, seems quite feasible. All right, then I think that's it. Power again is a duplicate of CNX Energy. So yeah, that's the story. So quickly to recap, I think the action to look forward to is in the private sector banks, the IT index, and look for specific levels to be broken out on the IT stocks. That could be quite interesting. And two places to stay a little away from for now perhaps is pharma and FMCG. Both have done a tremendous recovery and may be due for a correction or a consolidation, a sideways. So that's not where the action is likely to be. Realty, possible breakout or breakdown. If that happens, then realty becomes a play. But at this point, it is a consolidating situation. And just to, again, capital goods, LNT, big move weekly, you could perhaps look at that, right? All right, so that's a quick and sharp review of the sectoral indices. Hope it's been useful. Please send any feedback if you need to get in touch, or if there are any queries or anything, you know how to get in touch. And well, look forward to hear from you. So should be a profitable week ahead, I think. Not that many conflicting signals this time. So make the best of it, right? All right.